Okay, so okay, whatever. It's being special today. So again, your chapter 3 homework is due tonight. I can always move that out though if you guys need me to work on over spring break. So we can move that out until after spring break as well. So basically, if you need to get caught up over spring break, you can use that time to get caught up. So again, when we come back from spring break that Wednesday, we'll do a short exam review just to kind of go over, but really just have a work day. So it'll be a time to work on the projects and any lingering chapter 4 stuff. And then your test will be due the 2nd. Okay, so that's where we're going. So today, though, we are ready to go ahead and wrap up our accounting cycle and talk about chapter 4. So I just threw it out there under unit 3. You should see a link under the chapter 4 adaptive learning plan for the chapter 4 practice. We're going to get into this. So basically, to give you my short lecture as we go through and do these actual closing process. So up until this point, we have learned a lot of the accounting cycle. We learned to analyze transactions, journalize them, post them. Then we did that unadjusted trial balance. That was all like chapter 2 stuff. Chapter 3, we learned we needed to adjust, and recognize any revenues or expenses that hadn't yet been recognized. Then we did an adjusted trial balance. Once we hit that point, the only thing left in the accounting cycle is to do our financial statements. And if you remember from chapter 1, I know we go way back now, we have an income statement that we start with where we're calculating like net income, revenues minus expenses. And then we went into the retained earnings statement where we took beginning retained earnings, added in net income, subtracted out dividends. I'm going to actually open up the PowerPoint just for a minute. And then we did the balance sheet, which showed all, assets equal liabilities plus equity. Did you have questions?
Yes. Is that on Cengage?
Yes, the practice is on Cengage, chapter 4 practice. But there should be a link under Canvas under unit 3 now too. You need to get into it.
I don't have that. It popped up on mine.
Okay, I was going to say, maybe you have to refresh.
Yeah, I was going to say, I was in a different class, and then I went into your
all the way down to the bottom, because sometimes it adds it. Go into Canvas. Instead of home page, scroll down. There it is. Thank you. You are welcome. Okay. So I'll open up the PowerPoint just to go over a little bit of the stuff. Those are kind of small. Is there a better example of my? Still kind of small, but just to kind of give you something to look at here. Well, I can blow it up as we go through it. So in chapter 1, we did this income statement, just a basic income statement where we listed our revenues. We could have 1, 2, however many. We added them up, listed expenses, and added them up. Revenues minus expenses equals net income. Or if expenses were greater, it would be a net loss. Okay, so that's something we've already learned. We just haven't done it in a little while. And then the retained earnings statement, we took any beginning retained earnings, we added in our net income from that statement, subtracted out dividends, and then got an ending retained earnings. That balance then went on our balance sheet. So when we have a balance sheet, we list all of our assets and add them up, which we'll talk a little bit more about this in a minute, our liabilities, and our equity. In our equity section, we only have common stock and retained earnings, okay? We add up equity plus liability should equal assets, right? That's our basic accounting equation, assets equal liabilities plus equity. So the only thing different on our statements in this chapter is you'll notice they've broken down assets by current and property, plant, and equipment. Property, plant, and equipment is like what we talked about in chapter 3 with depreciation. Those are your fixed assets or your long-term assets. So that's anything you keep in the business more than a year. Buildings, equipment, land, stuff like that. So they've just broken it down, okay? So in current assets, you have cash, accounts receivable, supplies, prepaid insurance. any of those accounts that are used up usually in the current year, okay? And then under that, you have property, plant, and equipment. So you have land, then office equipment minus its accumulated depreciation, so it's its book value. Okay, we learned that last chapter. So that's just a little difference in this statement. So in this chapter, we're going to do our financial statements from our adjusted trial balance, and then we are ready to do our closing entries. So the whole purpose of closing is, what happens is when we did these statements, retained earnings now holds revenues, expenses, and dividends, right? Because we first calculated net income, and then in that statement of retained earnings, we took beginning retained earnings, added in net income, and subtracted out dividends to get a new retained earnings. So retained earnings is really a combination of revenues, expenses, and dividends. Okay. Well, we do that because we prepare these statements to see what profit we made in the current year, right? We want to know year by year how much we're making profitably. Profitably, is that a word?
Sounds
With
great.
the profit. I make up my own words a lot. So had a little too much caffeine today, I think. So anyway, at the end of the year when we close out our books, the whole point of closing out our books is that we close out what we call temporary accounts. Temporary accounts are revenues, expenses, and dividends. And then one we create called income summary. But we'll get to that in a minute. So another way to remember is any account that shows up on the balance sheet is a permanent account. So it just keeps a balance from year to year to year. You know, we don't close out our cash. I mean, what would we do with it? It's not a good idea. So that all carries over to the next period. But every year, we want to keep track of our net income and our retained earnings separately. So at the end of the year, what we do is we do 4 journal entries to close out all of our temporary accounts. And then we journalize and post those just like we would any other journal entries. And then our ledger balances will match our balance sheet. Because you don't see revenues, expenses, or dividends on this, okay? Those are all in retained earnings. So those all get put into retained earnings, which makes sense. Retained earnings is an equity account, and it really is revenue minus expenses minus dividends. That's what retained earnings is. But it carries on year to year. So retained earnings is the amount of the profit that we're keeping every year. Make sense? Okay. So closing really isn't bad. You just follow a blueprint. You do 4 closing entries, you journalize, you post them. You do a post-closing trial balance, which should be just these accounts with these balances you could get from the balance sheet, and you're done. Okay? Woohoo, right?
Yeah. No.
Yeah, woohoo! Get excited. Like, nah. And you have access to those PowerPoints.
Okay.
So yeah, so that's
right.
that's on Canvas. So yeah, there's a lot more information in the PowerPoint, obviously, but I figured we'd just discuss it
Yeah,
as we go
because that,
through.
I mean, that right there actually probably answered my question about homework.
Oh, sweet. I like it.
Maybe.
Maybe. We'll see. So on the practice, on this first one, like I said, when we finish this chapter, we have done the entire accounting cycle. So they just want us to put it in order. They gave us like 8 steps, and there's 10 total steps, so we have to put in the missing steps. That's really all it is. So just to kind of get you understanding the whole process, which again, once we've done closing entries, in this chapter, we have completed the entire accounting cycle. So for A, for example, transactions are analyzed and recorded in the journal. We did that, really, we learned how to analyze in chapter 1, but we journalized in chapter 2. So that's the first one. So the first step in the accounting cycle is always to analyze and record transactions in the journal. Okay? NB is the next step. That is the second step. Those transactions are then posted to the ledger. So again, we did that one in chapter 2 as well. An unadjusted trial balance is prepared. That is step 3. We also learned that in chapter 2. Okay. So that got us through chapter 2. We did those first 3 steps because again, those were the lengthy ones, right? It took a little bit of time to learn debits and credits. Step 4 is we are going to assemble our adjusting entry or our adjusting data. Adjustment data are assembled and analyzed, to be specific, okay? So we're going to gather up all of our adjusting data, you know, supplies used, insurance used, depreciation, any revenues we haven't recognized. We get all that data ready. Step 5 is optional. Step 5 is an optional end of period spreadsheet is prepared. We did not do that in this class, but basically what a worksheet is it shows the unadjusted trial balance, it shows all the adjustments, and then you adjust it. So you kind of see an unadjusted to adjusted. It's not official, it's nothing that businesses have to, you know, disclose. It's just good practice. But as accounting has become more computerized, that's kind of gone out the door, okay? It just helps us prepare financial statements. After we do that, then we do actually go and journalize and post our adjusting entries. So adjusting entries are journalized and posted to the ledger. And then after that, we do an unadjusted trial balance. So step 7 is an unadjusted trial balance is prepared. So steps 4 through 7, we did in chapter 3. That was all adjusting entries, okay? And then in this chapter, we are going to prepare financial statements. That's step 8, financial statements are prepared. Then on step 9, we're going to do our closing entries, which we're going to do in the next couple of exercises. And last but not least, a post-closing trial balance is prepared. Okay. So those last 3 steps, it's important to understand just the order in which things are prepared. If you don't do your adjustments and your adjusted trial balance, all of your numbers are going to be wrong when you do your closing. So we have to do everything in that order. That's the whole cycle. Okay. 7. Oh, sorry, that should be an adjusted trial balance is prepared. Thank you. Yeah, because I already had an unadjusted in step 3. Thank you. Yeah, step 7, an adjusted trial balance is prepared. I think I said it right and clicked wrong. Yeah, it's kind of where I'm at today. Right. And then you can check your work if you want. Okay. So this next one is just looking at identifying permanent accounts. So again, a permanent account is everything on the balance sheet. Really, just as a general reminder, we'll write them on the board. Oh, for a sec. I need to go down and get them first. Just as a reminder, temporary accounts are all revenues, all expenses, dividends. And then technically, we're going to create a new one we use only in the closing process called income summary, and it's a temporary account as well. Okay, so those are 4 types of temporary accounts. So the post-closing trial balance will only show permanent accounts. Okay, so is accounts payable permanent or temporary?
Yeah.
Permanent, good. So it appears on the post-closing trial balance, okay? So we're really just identifying permanent accounts. How about accumulated depreciation? What type of account is that? Anyone remember? Accumulated depreciation. It would appear. Because if you remember, accumulated depreciation is what we call a contra asset account. It's what we use to hold the depreciation on like our fixed assets. Cash, it appears. How about common stock? Good. Dividends? Yeah, they're temporary. Perfect. Depreciation expense? Does not. Fees earned? Very good. See, these are pretty easy, right? Once you get in the habit. Office equipment? Yes, because it's an asset. Salaries expense? Nope. Salaries payable? Yes, because it's a liability. And supplies? Yes, it's an asset. So again, as long as, you know, it's probably shorter just to remember the temporary accounts, right? If you remember which ones are temporary, everything else is permanent. Yes, it really is helpful. Any questions on that?
No, I'm really glad I bought a printer at the beginning of this semester. Because it's come in really handy when it's come to this class.
You know, I print all
Other
the time.
plates too, but
Yeah.
other classes too, but this one in particular.
Well, there's just so much information. If you can print the instructions and then do it, you know, it's so much. Like at home and in my office, I have 2 screens. And eventually we may, you know, I've asked that we have 2 screens in here because it makes life so much easier. But, you know, I need to ask again. It's been a minute. To stay on top of that, you know. Okay, I'm going to erase these just to make room. I want to do the T accounts on the board. I think when you see the T accounts through the closing process, it makes life much easier. So when you do closing entries, I highly recommend you get scrap paper and do T accounts. Just because if you can visualize it, it makes sense, okay? So this one, it says, after the accounts have been adjusted, it's the end of the fiscal year, the following balances were taken from the ledger. So we have retained earnings, dividends, fees earned, all that. It wants us to journalize the 4 entries required to close the accounts. Okay. Well, I'm going to give you the step-by-step. The first closing entry we always do is we close revenues, and it kind of tells us there on that one. So the first journal entry is to close revenues. I'm going to establish some of these accounts though, so we can kind of see. What's the balance in fees earned?
356,500.
Thank you. Okay. And then we have wages expense. How much is in wages?
283,100.
And then we have some rent. What's rent's balance?
56,000.
56,000. Thank you. Supplies.
$11,500.
Thank you. So much easier than looking back and forth.
Yeah.
Plus, I pulled a neck muscle, and so I'm still like trying to get
13,000.
I can move much better 3 days later. It's getting old. Dividends.
10,500.
And then we have retained earnings.
$643,600.
Thank you. And then we'll just create income summary. Thank you for your help. So I'll give you guys just a second to do that.
I mean, I can write as you talk.
Okay, cool.
Don't hang.
I think everyone's kind of writing right now, so I'll give everyone a second. So, you know, I don't want to rush you guys. Right. Yeah, when we're all finished, yeah, I'll take a picture. Picture lasts forever, right? Okay, so this is just showing our temporary accounts and retained earnings because everything gets closed into retained earnings. So what we do with closing entries is, again, we always close our revenue account first, okay? So revenue has a normal credit balance. To close it, you just need to debit it to zero it out. Closing is just zeroing it out, okay? So my first journal entry is truly going to be closing out fees earned by debiting the balance, which will then zero it out. And that amount gets credited to income summary. So step 1, we close revenue into income summary. So that is always your first closing entry. So you will always debit revenue and credit income summary. You may have two revenue accounts, but you would do the same, okay? It would be the same. You would just have two debits and one credit. So I'm debiting fees earned. Oops, wrong balance. Or it's balanced.
Just to balance it out.
Yeah, we are zeroing it out. So the whole idea of closing entry is just to zero out the account. So if it has a credit balance, we just debit it. If it has a debit balance, we'll credit it. And we're going to use income summary as like a placeholder account, just in the closing process. Okay, so your first closing entry is always to debit all your revenues and credit income summary for total revenue. Okay. Your second one is to close every expense account. So it's a little lengthy, but it's easy still. Okay, so we're truly on the second entry going to credit every expense account to zero it out.
To add those up as we go.
Well, the good news is in the real world or on the project and things like that, you would have already completed your financial statements. So you would have those totals from that and you could just transfer it over. In this example, we would need to add them up. But yeah, in general, you would have all your totals, which makes life easier. But great question. So I'm just going to credit each of these, just their balance. And again, the more expenses you have, obviously, the more lengthy this process is. And for time's sake, I will just give you the totals. Copy them over very well. Okay. Should be 363,600. So that gets debited to income summary. So I would take my total expenses, 363,600. Okay. So I credit all of my expenses, their balance, and that total expense amount gets debited to income summary. So then I would just show my credits. Wages expense, 283,100. Rent expense, 56,000. Supplies expense, 11,500. And miscellaneous, 13,000.
So when you when you did the second income summary, you just added up all of the expenses, right?
Yes, you got it. Absolutely. So yeah, you're going to debit income summary for total expenses. So now when I look at income summary, and this one's kind of a fun one because you can see our expenses are actually greater than our revenues. So here we actually have a net loss. But right here in your income summary, these are expenses. And this is revenue. So I would just then balance this income summary account to figure out what my net income or net loss was. And again, once you've already, most of the time in the full cycle, you would have already figured that out, calculated it. But I would take 363,600 minus 356,500. What's that, 7,100? Well, income summary actually has, this one's a little trickier, next one's not. Actually has a debit balance because our expenses are greater than our revenue. So this is a net loss. If it has a debit balance, then it's a net loss because expenses are more than our revenues. Okay, so we had a bad year. So my third journal entry is to close income summary into retained earnings. This is why it's useful to do the T accounts, because I can easily see that income summary has a debit balance. It's a net loss. So to close it, in this case, I'm going to credit income summary to close it out. And that's going to get debited to retained earnings. Okay? Because a net loss is reducing my retained earnings, money lost. Okay? So my third journal entry is a debit to retained earnings and a credit to income summary for the net loss amount. And we'll see this on the next one, but if we had a net income, our journal entry would just be flip-flopped, okay? We would debit income summary and credit retained earnings if we had a net income.
I noticed that I did that on, so when we were journaling that I was.
Like flip-flopping?
Yeah,
Yeah.
I put the wrong one on top.
It's easy to do.
Oh.
This now has a 0. So now that third journal entry was to close income summary into retained earnings. And then our very last closing entry is to close dividends. Well, dividends has a debit balance. So to close it, I will credit it. And that gets debited to retained earnings because dividends reduce my retained earnings. So I debit retained earnings and credit dividends for the $10,500. So now it doesn't show it on here, but at the end I would know it was in my retained earnings by taking the credit, the $643,600, which is beginning retained earnings. I subtract out my net loss, and I subtract out my dividends, and my new retained earnings is $626,000. That's what should be on my balance sheet and in the ledger. Okay. So again, the whole point of the closing entry is to close out all the temporary accounts. We just do those 4 journal entries. So now all of my accounts are 0. I forgot to do my 0 on my dividends. And everything's closed into retained earnings. Okay. Any questions on that one? So those are always the 4 closing entries. Close revenues into income summary. Close expenses into income summary. The third, close income summary into retained earnings. And fourth, close dividends into retained earnings. The only part that you have to think about is whether it was a net income or a net loss. Otherwise, it's the same structure, okay? Okay, let's see. I want to leave us a little time for any questions we have before we're out, but I also want to go through the statements a little bit. So I'll probably just give you guys the numbers on these as we go through, and we'll kind of talk them through as we go, just so we can practice a little bit on closing entries. So this one is showing the Gorman Group Financial Planning Services. We're at the end of the fiscal year. This is the end of period of the adjusted trial balance. So we've done all the adjustments, and now here's our adjusted trial balance, okay, with all of our accounts. And we're just going to prepare statements. So again, I'm going to kind of breeze through these a little bit just for time's sake, but it gives you a good blueprint for doing your homework when you get to those. So income statement, again, looks like this, and it's always revenues minus expenses. So I'm going to give you these. Service fees is my revenue, $468,000. And we also have a rent revenue of $5,000. You always list your biggest amount first. So then we total our revenues, which would be $473,000. Okay, so this is an example where we have 2 revenue accounts. And then we do the fun of listing all of our expenses. These are also listed in greatest to smallest amounts, with miscellaneous always being listed last, regardless of its balance. When you have the drop downs, you'll only have one to choose from at a time, so it kind of drives you to choose the correct one. But we'll start with salaries, $291,000. And these are all coming from my adjusted trial balance, just so you know I'm not, where I'm getting these numbers. Okay, so salaries, $291,000. Depreciation expense on the equipment is $17,500. $17,500. Rent expense is $15,500. $15,500. Then we have supplies expense. Supplies expense was $9,000. Then we have utilities expense next. Utilities expense, and it's $8,500. $8,500. Depreciation expense on the buildings, $6,600. So $6,600. Repairs expense. Repairs is $3,450. So $3,450. Insurance expense is $3,000. Insurance, $3,000. And last, miscellaneous, $5,450. So again, miscellaneous is listed last regardless of its balance. And then we just add all of those up. And again, to save time, that's $360,000. $360,000 for total expenses. So then we take total revenues minus total expenses. And what's my net income? Very good, $113,000. So again, revenues minus expenses. Revenues are greater than expenses, so we actually have a net income. Yay! Right? It's about time. Then we move on to the retained earnings statement. Well, we start with our beginning retained earnings, which was November 1, 2017, the beginning of their fiscal year. And again, this is on that adjusted trial balance. It's $195,000. $195,000. We're going to calculate our increase in retained earnings. So we're going to start with net income, which we just calculated. So that's the $113,000. Then we're going to subtract out our dividends, which are $20,000. So I put them in as a negative just so I see that they're being taken out. It's visually helpful. So net income minus dividends, so $113,000 minus $20,000, what, $93,000? So that is what we call increase in retained earnings, is net income minus dividends, $93,000. So then I just need to calculate my ending retained earnings. I just add those two together to get $288,000. Okay. So my ending retained earnings should be $288,000. That's kind of what my goal is when I'm done with my closing entries, that retained earnings will be $288,000. And then the fund balance sheet. This one is showing assets on the left. So we're going to start with cash. And cash is $11,000. $11,000. Next, we have accounts receivable, which is $28,150. So $28,150. Then we have supplies. Supplies are $63,50, $6,350. And our last current asset is prepaid insurance of $9,500. $9,500. I add up those four accounts to get my current assets of $55,000. So current assets are $55,000. And then I'm ready for property, plant, and equipment, which are, again, my fixed assets. So I start with land. and land is 75,000. 75,000. Then I want to calculate my book value of my other fixed assets. So I start with buildings. Buildings has a cost of 250,000. Buildings, 250,000. And then I'm going to subtract out its accumulated depreciation. So minus 117,200. So minus 117,200. So on that next line, I'm going to do my book value on the buildings. Well, that again, we learned in chapter 3. That's buildings minus accumulated depreciation. Okay, so this one will be 132,800. 132,800. And then I'll do the same for equipment. So equipment, the cost is 240,000. Again, all from my adjusted trial balance. Minus accumulated depreciation on the equipment. So minus 151,700. 151,700. So my book value for the equipment is 240,000 minus 151,700, or 88,300. Okay. So that's a new thing we've been doing, you know, with our assets, to separate them out and then show the book value. So total fixed assets or property, plant, and equipment should be 296,100. 296,100. Total property, plant, and equipment. To get total assets, I would take current assets of 55,000 plus property, plant, and equipment at 296,100. So my total assets are 351,100. 351,100. Okay. Let me scroll. I have to scroll down to scroll over. Sometimes that gets annoying. Then it shows up. Okay. On the right-hand side of that balance sheet, we're going to do liabilities and equity. Current liabilities, we have accounts payable. Accounts payable is 33,300. 33,300. We have salaries payable of 3,300, so just 3,300. They're like threes. And unearned rent of 1,500. So total liabilities, I add those all up. You should get 38,100 for liabilities, 38,100. And then under equity, we have common stock, and that is 25,000. 25,000. And retained earnings. This retained earnings comes from our retained earnings statement. So it's the 288,000. 288,000. We're going to add up our equity. So common stock plus retained earnings. 313,000. 313,000. And then I would add liabilities of 38,100 plus equity of 313, and it should be 351,100. So assets equal liabilities plus equity. Woohoo! Again, everything on that balance sheet is a permanent account. It's what will be on our post-closing trial balance. Okay. This one's kind of long, but hopefully we'll have a little bit of time left over. I forget how long some of these are, so I apologize. It's like, we'll get through it though. It wants us to do the closing entries. We'll make this just a tad bit smaller so we can see. Well, again, the good news is once you've done all of the income statement and all of that, you have all of your numbers, so you don't have to recalculate. So the first closing entry, you know, we would still debit our revenue accounts and credit income summary. So we're still following that same process. So we're going to debit service fees, and its balance was 468,000. And we're going to debit rent revenue, the 5,000. You don't have to retotal these. I mean, that one's pretty easy, but you could just go back up to your income statement and grab your total revenues, okay? So I would add those two together, and I'm crediting income summary for the 473. Okay, so debit both my revenue accounts to zero them out and credit income summary. Well, what do I do on my second? What do I do to close expenses? What will I do to all my expense accounts to close them? They all have debit balances, so how will I zero them out? You'll credit them. Very good. So on the second entry, we're going to debit income summary and credit all of our expenses. Kind of a long one, right? If you want to skip putting in all the numbers, I'm just going to put in the total expense, just to save some time. Again, we have that though. Total expenses was $360,000, so you don't have to recalculate it. So I can debit income summary the $360,000, and then all of some of them just, I can do it quickly. So you can feel free if you would like to, but don't feel the need to put them all in here just to save time. On your homework, obviously, you'll want to, but. Utilities, depreciation, repairs, insurance, miscellaneous. So I would credit each of their balances. And this can either be taken from the income statement at this point or from your unadjusted trial balance. They're the same numbers. I'd print off the income statement from the homework and do them that way. Okay. So now I've zeroed out all of my expenses. They had debit balances. I credited them. They're all zero. That total expenses got debited to income summary. I'll just illustrate this portion only. I won't put all the expenses on the board. We don't have that kind of room or time. Okay, so now we have a $473,000 credit in income summary from our first closing entry, and we have a $360,000 debit to close all of our expenses. So we already know, but that's just illustrating again. We calculated it in our net income, in our income statement. But remember, we took 473 minus 360. That has a balance of 113,000. That's a net income. Okay, net income. So on the third closing entry, to close that net income, I need a debit income summary, and I'm going to credit retained earnings. Okay. So here's where I would debit income summary and credit. I have a balance there. I need to put in. Beginning balance was 195. Maybe for beginning balance, okay? So I'm going to show that journal entry. I'm going to debit income summary to zero it out and credit retained earnings for the net income amount. Again, I've already done the statements, so I can get that income amount from my statements. Okay, so I don't have to recalculate. That gets zeroed out. And the last one is to close dividends of 20,000. Well, dividends has a debit balance. So we're going to debit retained earnings and credit dividends for the 20,000. Oh, good. We don't do a post-closing trial balance. Okay. So those are the closing entries for this one. They're easier when you've done the statements first, right? Because you've already done all the calculations. Does it make sense? When you've done the statements first too, I know we kind of went through them quickly, but okay. So now we've debited retained earnings 20,000 in that fourth closing entry. So our balance should be the 288,000 that shows on our retained earnings statement and on our balance sheet. Okay. Those are a more typical flow because you have a net income there. Okay. Any questions? You guys feel okay? The closing entry, as long as you kind of write down, you know, close revenues by blah, 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 you kind of give yourself a blueprint. They're really pretty easy. The last thing this says, it's just on number 3, it says if the balance of retained earnings have increased $115,000 and dividends remain the same, what would have been the amount of net income or loss? So what that's saying is up here, if our increase in retained earnings, if retained earnings would have increased $115,000 instead of $93,000, what would have happened to net income? So this increase here would have been $115,000. Would income be higher or lower? Increase in retained earnings would be higher. So retained earnings would be higher. Good. So that means your net income would be higher. So it's just kind of giving you a what if situation to look at there. But if you're in, you know, and it would have been higher by, I have 135,000 would be your net income amount then. Okay. You're basically taking the difference between the 115,000 increase and the 93,000 increase we showed. So that would have added another, what, 22,000 of retained earnings. So we would add that to our net income. Our net income would have had to have been 22,000 higher. Okay. Any questions on? Can you see that? Okay. Okay. You want up?
Yes.
Okay. Sorry.
Perfect.
Okay. Any questions on closing entries? The last step, again, is just doing that post-closing trial balance. The only accounts you would have on there are your permanent accounts. You get it straight from your balance sheet. It'd have assets, liabilities, and then the only other thing, common stock and retained earnings. So your post-closing trial balance will be much shorter because it won't have any temporary accounts, no revenues, expenses, or dividends, which we know we have a lot of expenses, right? So, okay. Any questions? Okay, well, as a reminder, go ahead and, you know, you should be able to complete project 1 at this point because we've done adjusting entries. If you missed last week, I do have the examples recorded and posted on Canvas, so you can watch those and kind of get caught up. If you have questions, I think that'll really help with the adjusting entries. So be working on 3 and 4 in those projects. It'll all be due after spring break. So when we come back, we'll have one more day to kind of review and go over any questions you have on the projects or the homework and get you ready for the test. Okay. But we do have about, what, 18 minutes, 19 minutes, something like that, 18 minutes. So if you have questions that you want to ask me about chapter 3 homework, I can help you guys with that.